different approaches and techniques to selling disability insurance, and throughout the presentation, he'll be sprinkling in some great sales ideas. Before we start, I want to go over a few items. We can't hear you, so if you do have any questions, please type them into the dialog box on the right side of the screen, and if time permits, we'll answer them at the end of the presentation. So let's go ahead and get started. I'm going to go ahead and hand it over to Ben.
Andrew, thanks. Hey, folks. As Andrew said, good morning, good afternoon. Thanks for being with us again today. A great presentation, 7 Secrets to DI Success. I want to jump right into it. I'm going to do my best to keep this about 20 to 25 minutes and then answer any questions that you folks may have at the end. So here we go. Well, most agents fail when it comes to selling disability insurance. Well, why is that? We feel that it's because there's several secrets out there and sales ideas and techniques that no one has told them. And I want to go over those today. And what I want to do is reveal these 7 secrets. I want to explain to you and show you how to utilize these secrets. And then ultimately, folks, I want to show you how using these secrets is going to help you to build your block of DI business. So that's what we're going to do. Let's get right into it. Secret number 1, don't tell me what it is, tell me what it does. What do I mean by that? Folks, just in the way we use the term disability insurance, what we want to do is speak in our clients' vernacular. We want to tell them, we want to help them understand what it does, or excuse me, what it is. Ultimately, folks, disability insurance is paycheck protection. Very simply put, this is how I want you to explain it to your clients. Don't ask them if they have disability insurance. Don't ask them if they want to buy disability insurance. Ask them what they're currently doing to protect their most important asset. We all know that's the ability to earn a living, and that's protecting your paycheck. So all of us in the insurance world, you know, we use all these different terms. We understand the alphabet soup. We use DI, disability insurance. Our clients don't. So just explain to them exactly what it is. Simply put, it's paycheck protection. And folks, I can tell you right now, what this is going to do is it's going to change your client's perspective and help them realize the need for DI just in one simple phrase. And later on in the presentation, I'll give you some sales starters too to start talking about paycheck protection. So that's the first one, folks. Write it down. That's very simple and it's very helpful. Secondly, secret number 2, sell the need with statistics. Disability insurance or paycheck protection, folks, is a needs-based sale. Your client's not going to wake up in the morning and give you a call saying, you know what, I think I'm going to call Ben over at DIS or Andrew at DIS. I'm going to call my agent because I'm going to buy some disability insurance today. That's not how it works, folks. You need to express the need, and the best way to do that is with statistics. I want you to show them that the risk is very real. The chances of becoming disabled are very real. Here are 3 statistics that we're using just for this quick presentation, but we have hundreds of these stats. And actually, you can see at the bottom here, and you're more than welcome to order this. It's our free DI Statistical Power Pack. It's a very nice one-page PDF that we've got about 15 to 20 additional stats, just like the 3 you see right here. So anyways, I can't emphasize enough expressing the need. So let me go over these 3 stats in case you're unaware of these. First one. 3 in 10 working Americans will experience a long-term disability during their working years. Secondly, every 30 seconds, somebody files for bankruptcy in the wake of a serious illness. And then finally, this is one of my favorite stats. If you've ever been on our webinars in the past, folks, you've heard me use this one before because I want you to have fun with this. And this is actually something I was unaware of up until about a year ago. But, and ask your client this question. Ask your client, do they know what the largest minority in America is today? And, you know, pause for a second. Let them think about it. I promise you the first thing that's going to come to their mind is not going to be the disabled, but I'm here to tell you that it is. And just look at this statistic. According to the United States Census Bureau, more than 51 million Americans are classified as being disabled. That's the largest minority in our country today, folks. And as I said, I didn't even know that until recently. So that's a stat that you can kind of have fun with, and I guarantee you most people are not going to know that answer. And actually, I believe that number is going to be higher now. That was from the 2006 census. As you all know, we just did the 2010 census. So I think it's actually closer to 54 million being disabled. But anyways, That's the secret number 2, folks. Sell the need with stats. Order our stat pack today. Number 3, your business owners, insuring the golden goose. Let's protect their baby. A lot of people don't realize that business owners also need paycheck protection and business overhead expense, which basically is cash flow protection. So your secret right there is if you're able to protect their own paycheck, well, guess what? They also need to keep the doors open to their business. So let's provide them with cash flow protection. Look at this statistic right here. Did you know only 5% are insured with business overhead expense? And folks, if you're not too familiar with business overhead expense, I'll let you know what it is. It's a reimbursement policy that's going to cover the monthly business expenses. And those can range from the salary of employees, electric bills, water bills, phone bill, your rent, your loan payment, your lease. There's a list of about 20 to 30 different types of items that it'll cover. So it's very important to the business owner so that they can protect their golden goose, so that they don't have to close the doors of their business if they're unable to go to work because they're so sick or so injured. Andrew, did you want to add something to that?
Yeah, I just want to let you know that you can have as much individual coverage as you want, and it will not affect how much you can get with business overhead expense. A lot of these carriers now will get up to $50,000 per month in overhead. So if you have any clients that are physicians running a really high-tech medical office, we can get a lot of coverage from them, and we can even go to Lloyd's of London to get something on top of that. And then secondly, we have a carrier standard insurance that's unleashing a new product that will actually give your client a discount on both the individual and business overhead if they purchase both those at the same time.
Yeah, good point, Andrew. Thank you. Again, folks, let me stress here that business overhead expense is a very underserved market, and if a lot of you have clientele that are business owners, I would definitely highly recommend making sure that they're protecting their business. And what's another thing that business owners like, folks? We all know this is when it comes to taxation. Well, a BOE policy, you can deduct the premiums and still receive tax-free benefits, and the reason for that is you can write off this BOE policy as a business expense. So in the long run, it's a deductible premium and a tax-free benefit. Real quickly, before we move on to the next secret, I got another great sales idea when it comes to business owners. It's called Businesses for Sale. And this is what I challenge you to do. The Sunday paper, next time you get the Sunday paper, or not even on the paper, you can go online, folks. Go look up the classified ads section. Go on Craigslist or go on your local paper. Anyways, whatever it is, look for businesses that are for sale. Now, I'm not telling you to go buy a business. What I want you to do is look for businesses that are for sale due to the owner having to close up because of health reasons. They're forced to sell their business because they can't afford to keep it open because they become too sick or too injured to run their company. So you're going to find out where that business is. Now, take note of this. I want you to go to the surrounding businesses that are next to the shop that's closing down. And folks, I can tell you right now, a lot of these business owners are a very tight-knit community. So if you go to a business in a local strip mall, chances are the surrounding neighbors and their friends are going to understand and know why they're closing up their shop. So take this idea and run with it. Go to those neighboring businesses and say, hey, I noticed that your neighbor here is closing up because they became injured in an accident and they can't keep their doors open. Well, are you protected? Ask them that question. Do they have business overhead expense so that if the same thing were to happen to them, they could keep their doors open? So that's a great, quick sales idea, folks. Again, check online, check your local paper, and give it a shot. It's a good way to prospect. You might find some good leads there. So that's number 3. Secret number 4, tell the previously declined yes. What do I mean by that? A lot of people, folks, that have applied for disability in the past may have been declined. There's many reasons why people get declined. Majority of them is probably due to health concerns, health reasons. Well, over the past few years, the carriers have definitely made strides in becoming more lenient, more liberal with certain type of medical conditions, medications, whatever it may be. So you may have had a client 5 years ago to get declined because they are on too much anxiety or depression medication. Well, guess what? we have a solution for you. The secret here, folks, is that here at DIS, we represent carriers that can provide you with creative solutions for anyone that may have had health issues in the past, or maybe it's their age, or it's a high-risk occupation. Whatever it is, I want you to data mine your clients. I want you to go back through your existing book of clients and make sure, first of all, that you've offered everyone paycheck protection. You've offered them disability insurance. Maybe there was some you didn't even think to offer because you figured they wouldn't qualify. Well, whatever it may be, data mine your clients, go back, tell them that you have a solution. You can get them paycheck protection. Again, here's a list of just some of the reasons for the decline. You got the height and weight, might be too much. You got bad labs, sleep apnea, hepatitis, chronic fatigue syndrome. The list goes on and on. I'm sure most of us are aware of that. So those are some of your reasons. Along with the underwriting, folks, and this is also a challenge for many agents, I want to inform you that there is a simple application process. And a lot of the carriers out there today offer simplified underwriting. And that is very helpful to you and the client. It's going to help you streamline the process. Let me give you a quick example. Some carriers out there will offer you $5,000 of monthly benefits, and you do not have to provide any income documentation, APS reports. You don't have to take a blood or urine test. You don't need a personal history interview. The only thing required for the simplified application process is just that, the application. You complete the application, you fill that out. More often than not, that's going to make it through underwriting, and it varies. I've seen it in 48 hours to 1 week, and that's a lot different than I'm sure most of you are aware. If you've ever written DI, your typical turnaround in full underwriting is 30 to 45 days. So if you have the opportunity to write a simplified disability case, do it. Now, I will mention this one thing. You have to fill out the complete application, which also, also means you need to answer all of the health questions on the application. So if there are any red flags that pop up, then the carrier does reserve the right to go ahead and order APS reports or income documentation or an exam. However, if you know your client's in good health, folks, and maybe they're just taking a couple medications for blood pressure or cholesterol, and you're applying for less than $5,000 a month, by all means, please use the simplified underwriting process. It's going to make your life easier, and it's going to make it easier for the client too. Again, so that's a little tidbit right there. That's the simplified process. But again, can't stress enough, tell the previously declined that you can now provide a solution for them. Number 5, secret number 5, multi-life. Sell multi-life with one sale, and that could turn into hundreds of policies. What do I mean by that? Well, if you can get 3 lives, 3 people working for the same company or in the same location, you're going to get them a discount. And with that discount, your clients are going to be happy. Their coworkers may be interested. And so instead of selling it to just one person that works at a company, let them know that you can provide them a discount with 2 other people. That's going to mean more commission dollars for you. And there is significant savings for females. And the reason for that, if you're not familiar with disability insurance, folks, female rates are much higher than male rates. Now, I shouldn't say much, but they're higher than male rates. There's a few factors that go into it. Obviously, it's going to be age and occupation. But your female rates are higher, and that's opposite of life insurance. It's cheaper for females on the life side, but for DI, they're more expensive. Well, with a multi-life discount, the rates now become gender neutral. So there's no distinction between male and female. It's all one rate. And that's going to save your females a lot of money, up to 47%, as you can see right there. I did mention, working for the same company. So W-2 employees, definitely. Guess what? We also can do it for 1099 employees. The only catch here, folks, is they have to be working at the same worksite address. So my example, and the ones that Andrew and I use in the sales department, is a real estate agent. Century 21 agents. A lot of real estate agents are self-employed or 1099 employees, but they all share a common worksite address. So if you know of a company just like that, 1099 employees, and you want to offer them paycheck protection, you can get them the discount. Just make sure they're working at the same at the same place. Andrew, did you want to add something to that?
Yeah, you know what? I wanted to add that, say there is an established multi-life at your client's company written by a different agent. Do you think that your client could get in under that same multi-life and get the discount? And would you get the commissions on it? The answer is yes. Even though someone else has put together a multi-life case at that same company, if you have a client that wants coverage, works at the same company, you'll get the commissions and your client will get the multi-life discount. So just keep that in mind, and always feel free to give us a call, and we'll do the research for you to see if there's an established multi-life.
That's a great point. Thanks, Andrew. Let me give you a quick example, folks. I just told you the savings for females. Well, here's a case study that we actually did a couple years ago, and I'll run through it real quickly. We had a 46-year-old female attorney, sole proprietor here in California. She had a couple of clerical employees. Well, she understood the need for disability insurance. So she called her agent, and the agent called us, and this is what we quoted. We did a true ONOC policy, best definition out there. We ran a $4,000 monthly benefit, 90-day waiting period out to retirement age, at that time age 65. It was a non-can policy, so the premiums are locked in. We had partial benefits, which are the same as residual, and the cost of living adjustment. The premium for her policy, $4,000 a month, 90-day wait to age 65, non-can, ONOC, residual, and COLA, $4,829. We ran the quote. We emailed it back to the broker. Broker presented it to the client. What do you think her reaction was? $4,829. Well, you probably guessed it. She was stunned. That's a lot of money. Now, she understood the need for the protection, but she just didn't have that in her budget. And so the broker's like, all right, I need some more help. What do I do? Well, let me tell you what we didn't do first off. We didn't take away the ONOC definition. We kept the same definition of disability. We didn't take the elimination period out to 180 or 365. We kept it at 3 months because we knew she wanted a 3-month wait. We didn't shorten the benefit period. We kept it to age 65. We could have taken it down to 5 years or 2 years, but we didn't. And we kept all those same features that I mentioned, the non-can, the residual, the COLA. Here's what we did. You remember those 2 clerical employees that the broker told us about? Why don't we add them? And the broker's like, whoa, wait a second. You didn't hear me. She already can't afford it. Why would we add 2 more employees? Well, by adding these 2 employees, the rate is now based on that gender-neutral rate that I talked about. And that's where you see the big savings for the female. So we took 2 clerical employees. The lawyer, the attorney, she kept the same coverage we quoted. The 2 employees, we did this. A very simple benefit. $600 a month, a 1-year waiting period, and only a 2-year benefit period. And you're probably looking at that and thinking, well, that's not great at all. Well, here's the reason why we did a 1-year wait for them. Folks, in the state of California, all W-2 employees pay into what's called state disability insurance or state disability income, so that if they become disabled, the state of California pays them for 1 year. There's a few other states in the country that offer SDI. Off the top of my head, I think they're New Jersey, Hawaii, Rhode Island, and New York. But anyways, that's why we quoted $365. 2-year benefit period, $600 a month. Well, the cost for all 3 of those lives, look at that, was $3,067. Remember how much it cost just for her originally? $4,829. Look at that, savings $1,700. And it's a win-win situation for everyone. She's happy. She got the policy she wanted. The broker's happy because he made his client happy and he made his commission. And those 2 clerical employees didn't have to do anything, and now they have an extra employee benefit. So this worked out perfectly, folks. I love this example. So anytime you've got females and you need to lower the rate, consider the multi-life. Ask them if they have 2 other people they work with that are interested in protecting their paycheck. I'm going to start moving this along, folks, but thanks for bearing with me. Okay, overcoming the price objection. This is another reason we feel agents fail when it comes to selling disability insurance. It's expensive. As you know, it can be very expensive, but it's also presented. The way it's presented is very important. So here's the way it's presented normally, and this is the way it comes to you when we actually run the quotes for you. So this is not your fault, but I want to show you something you can do real quickly to show the true value of this contract. As you can see, when you get the quote from us, here's a standard quote, one of the many carriers we work with. You can see here I've circled $5,000 monthly benefit is what this policy is showing, and the premium is the annual premium $2,449. What are we doing? We're showing them the lowest benefit that they're receiving at the highest premium. $5,000 a month, $2,449. If I'm a client and I'm looking at this, I'm thinking, well, you know what? To me, that just doesn't look good to the naked eye. That's not aesthetically pleasing. I'm like, that's expensive. I'm paying almost $2,500 for $5,000. I don't think so. Well, here's something real simple we can do, folks. Take out your calculator, your iPhone, your BlackBerry, whatever it is. Let me show you another way to present it. Let's show the true value of the contract. Well, how do we do that? Well, we know we're getting a $5,000 monthly benefit. Let's find out how long that $5,000 could potentially pay out. How do we do that? Simple. You take the client's age, in this particular case they're 35, and we did the benefit period out to age 67. So they could potentially receive 32 years worth of benefits if they became disabled tomorrow. 32 years. So that $5,000, you multiply that out over a period of time of 32 years. Real simple. You know, you do 5,000 times 12 months, 60 grand. 60 grand times 32 years. $1.9 million tax-free benefits. And why is that tax-free? If you're paying for it, if the client's paying for it out of their pocket, that's post-tax dollars. They're going to get a tax-free benefit if they ever go on claim. So $1.9 million of tax-free benefits is essentially the value of this contract and what they could be protecting, what they should be protecting. Take that one step further. Remember I showed you the annual premium is how it comes on the illustration? I want you to divide that by 365 days. Break it down to a daily cost basis. So now, for $6.71, you're protecting $1.9 million of potential tax-free benefit. Or excuse me, it is a tax-free benefit. Now, I would take my pen, my Sharpie, whatever I'm writing with, and across this illustration page, I would write $1.9 million, and I would cross out the annual, and I would say $6.71. Try that for me next time, folks. And it doesn't have to be when you're selling disability insurance. You should do this no matter what you're selling. You should be showing the highest value of a product or a contract at the lowest denomination of cost. And that's really going to show them that this is an affordable product. Okay, moving on, folks. The last secret, number 7, use the odds of loss comparison. Okay, well, a lot of people out there, folks, have other assets. I think we can all agree on that. These are 3 common assets that a lot of people have. Not everyone's going to have a boat, but you don't have to use the boat. In this example, we use a boat. Folks, you could use a stamp collection, you know, a gun collection, a jewelry collection, whatever asset they're paying some type of insurance for because they're protecting it. Anyways, here's a nice little chart that we can use to show the value of their current assets and how much they're currently paying to protect those assets. So you write down on a piece of paper, or you can do this on a napkin, folks. It's very simple. Start out at the top. Put the client's name. Put their age. If you know your client, you probably know how much they're earning. If not, ask them. They say, you know what, what's your annual paycheck? They tell you. Ask them the next question. How many more years do you plan on working? Again, we use a 35-year-old example, and they plan on working till retirement age 67, 32 years. Making $100 grand over the next 32 years, and this doesn't include, folks, any raises or inflation. This is just very simple for our comparison here. That's the potential of making $3.2 million over the next 32 years. Anyways, okay, so we got that at the top of our napkin or the top of our page. Now, below, I want you to ask your client, again, how much they're paying, how much their assets are worth, and how much they're currently paying. In our example here, the car, the house, the boat, the total value is $545,000 for these assets. On an annual basis, they're paying $2,920. Again, these are conservative numbers here too, folks. And then what did we do? What did I say from the last overcoming price objection? Divide that by 365 days. Let's show it on a daily cost basis. So in our example here, Johnny Appleseed, 35-year-old, is currently paying almost $8 a day, $7.98 to protect his maybe 2 cars, his house, and his boat. Okay, great. Does that include all of his assets? That's the number 1 question you need to ask your client. Does this include all of your assets? What's the answer? No. You're not protecting the most important, as we all know, which is the paycheck. Well, here's the secret, folks. For about 2.5% of a person's annual gross income, we can protect up to 60% of that. Now, if you're not comfortable using 2.5%, if you want to use 3%, use 3%. But more often than not, after all the policies and proposals we've run here at DIS and applications that have turned into policies, I am very confident and comfortable in using that rule of thumb of 2.5%. So, we know Johnny's making $100,000 a year. If we use the 2.5% rule, that's going to be a DI policy for $2,500. Now, let's go back to our chart. Look what we did. Remember at the top we said what is the value over the next 32 years of what he could be earning? $3.2 million. I want you to put that under the value column at the very bottom next to paycheck, $3.2 million. We use the 2.5% figure, $2,500 DI policy. Divide that by 365 days. A daily cost of $6.84 to protect that $3.2 million that he could potentially earn during his working career. So right then and there, folks, and look at the difference in the percentages of the assets, the value of the asset. Remember, originally his car, his boat, and his house, that added up to $545,000. Well, once you add the paycheck in of $3.2 million, your new total value of assets is $3.7 million, 85% of it being the paycheck. And he's currently not protecting that. So, anyways, for $6.84, which is less than what he's paying to protect all of his other assets, he can now protect his paycheck. And finally, folks, there's a column on the far right here, which is great too. It shows you the odds of loss. It shows you how the odds of you actually using those other insurances. The chance of using your auto insurance, 1 out of 20. Using your boaters or homeowners insurance, 1 in 15. Well, folks, earlier I think I made I showed you the statistic. 1 out of 3 people will become disabled for 90 days or more during their working career. 1 out of 3 out of work for more than 3 months. So this, again, we're using statistics, but we're also overcoming the price objection, and we're doing it in a way where we're comparing what the client's currently paying for their other insurance costs and what they could be and should be paying to protect their paycheck. So that wraps up secret number 7, folks. Let me run through them again real quickly for you. Remember, paycheck protection. Don't tell me what it is, tell me what it does. Secondly, sell the need with statistics. Show them the risk. The risk is real. Don't forget about your business owners. Business overhead expense, sell tax-deductible premiums, receive tax-free benefits, and businesses for sale. Check out your classified ads. Number 4, previously declined. Data mine your clients. Let them know you've got a solution. They will qualify. Multi-life. Take that one sale, turn it into hundreds. Obviously, you get the big discount for females, too. And I didn't mention this, but also the males get a discount. You just don't see as significant as savings as the females. But anyways, multi-life opportunity. Great secret right there. Underserved market. We showed the biggest bang for the buck. Remember, always show the highest benefit available at the lowest denomination of cost. And then finally, comparing the cost of a paycheck protection or DI policy versus the car, the boat, the home, whatever it may be, and use the odds of loss comparison. All right, folks, I think you're ready to go out there today and at least use one of these secrets or try one to see if it works for you. And I think you'll find it to be very helpful. And you go out there and help build your block of DI business. I'll give you some quick sales starters because these are questions that we often get. Brokers ask us, myself, Andrew, everyone in the sales department all the time, well, how do I start the conversation of DI, paycheck protection? Well, let me give you 3 quick questions real quickly. I want you to ask your client this. Currently, folks, we all understand, we all know what's going on with the economy and how we're in what's now being called the Great Recession. Well, I want you to ask your client this. Very simple. In this recession, what would happen to your lifestyle if you lost your job? That's just because they got laid off. What would happen to them? Do they have enough savings? What are they going to do? Unemployment? Is that going to be enough? Well, then take it one step further. What would happen to you if you became so sick or injured you couldn't go to work? What would happen to your lifestyle then? So that's going to really make them think. Are they planning for that? Do they have enough in savings? What are they going to do if they become sick or injured? What's going to happen to the flow of income? So that's a good way to start right now. Use today's current economic times. Secondly, have you ever had a client tell you, and this is maybe you're asking them if they're currently protecting their paycheck or have DI coverage, have they said, you know what, I've already got coverage from my employer? What was your response? Well, let me tell you this. Here's a good response to that. First of all, that's great. If they've already got coverage from their employer, that's a great employer. They're going to help protect part of their paycheck if they become disabled. Well, folks, group insurance, though, if your employer is paying for you to have a DI policy, more often than not, that's going to be a taxable benefit, right? So they might say, well, yeah, I've got 60% of my paycheck paid up to this cap. Well, when is 60% not 60%? I want you to ask them that. They're going to have no idea what you're talking about. They're going to think, what do you mean when is 60% not 60%? When it's taxed. So now you're looking at closer to, they're in an 18% tax bracket, 42% of their paycheck being protected. Then ask them, can you continue to live on your lifestyle on about 40% of your gross pay? That's your gross pay. We all know we don't live on our gross pay. We live on our take-home pay. So, again, that's 40%. That's a great segue for you to say, that's awesome. I'm glad that you have insurance from your employer. Let me supplement some individual coverage on top. Let's indemnify more than 60%. Let's get it closer to 70, 80, whatever it might be. Great way to respond to that question if your client says, you know what, I don't need it, I already got it. Not true. Take that a step further. And finally, maybe they have an individual policy, and that's great, folks. If you have somebody tell you that they already have their own DI policy and it's an individual policy, there's your best prospect right there, because they already understand the importance. They already know about it. They already have a policy. Well, how would you respond to this? I've got an idea for you. If they say, you know what, I've already got a policy, I don't need one, ask them this question. It's very provocative. Okay, is it the new kind or is it the old kind? And they're going to be like, what are you talking about? I thought all DI was the same. Well, that's not necessarily true. There's been many changes in our industries over the past, even the past 6 months. The carriers are constantly improving their benefits, increasing their issue limits, increasing their participation limits, increasing their definition of disability. So many changes that you just want to make sure that they are adequately protected and they have the best of what's out there and what's available. So at no cost to them, what you can say is, that's great, you already have a DI policy. I want to take a look at it and compare it to the latest and greatest, what's out there right now. And you're doing that cost-free. This is your client. You just want to make sure that they have the best protection available. So that's a good way to respond, rather than, brushing it off or letting it go. If they say, I've got a policy, you just say, okay, well, is it the new one, or is it the new DI, or is it the old DI? Maybe they bought a policy 5 years ago, and you can get something out there that's stronger and cheaper. Wouldn't you want to do that for your client? Or maybe you have the situation where you do your research. They just bought the policy a year ago, and they don't need to upgrade it or they don't need to change. But that's where you step in, as their agent, to help them make sure they're adequately protected. Anyways, those are some sales starters, folks. I appreciate you guys being with us. This is one of my favorite presentations. I hope you found it to be very informative and interesting. If there are any questions, I'm going to check real quickly to see if there's any questions, and I'll let Andrew kind of jump in and wrap things up, and then he can throw it back to me, and I can answer your questions. One thing I do want to add, folks, is if you like this presentation, you will be receiving an email about an hour with some of these sales ideas. So keep your eyes peeled for that. If you don't see it for some reason, give us a call. We're always here. You got our 800 number right there. You can see our website on the screen. Go there to request a quote, register for upcoming webinars, listen to previous webinars, get some articles, get some sales ideas. We want to make our website as user-friendly to you as possible. So I'm going to step back for 1 second, throw it back to Andrew. If you guys have any questions, feel free to type them in that box right now. Andrew.
Yeah, hey, thanks. Great job, Ben. I want to thank everybody again for joining us today. We truly appreciate your time, and I hope you found Ben's presentation helpful. Again, I just want to reiterate what Ben said. We'll be emailing this out to you. Let us know if you didn't get it later on today. Hey, I got a bonus secret for you. Give us a call here in the sales department. We have a ton of experience. So if you have any questions regarding a client or a lead, give us a call. We'll help you put together that quote so you can present the best possible illustration to them. I also want to let you know that our sales department guarantees a 24-hour turnaround on a disability quote request. And then also we have a fully staffed underwriting department that can help you out with your applications and your contracting. Just want to let you know, next week we have a really exciting new webinar. We've done this a couple times, but it's pretty new to us. It's about critical illness, how to sell critical illness. And this is a really new, popular product for us. It's getting a lot of buzz, and I definitely hope you guys tune in next Wednesday.
Andrew, thanks a lot. William, I see you have a couple questions here, and hopefully I went over those as the presentation went on, but you're talking about group versus individual. And are there any problems if the insured has group coverage already and they're looking for more? It depends, I guess, would be my answer. No, usually we can supplement on top of group coverage depending on how much they have in force. And if it's taxable, as I said, a lot of group coverage is taxable. So there's usually some room to supplement on top of group coverage. Cornell, great question. Return of premium on policies. Yes. We do have return of premium with several carriers that we represent. MetLife, Surety, Illinois Mutual, and Mutual of Omaha all have a return of premium product. Let me definitely say it can be a very expensive rider, but it is available. And we do know that it is very appealing to many people. So if you're interested in seeing return of premium when you get quotes from us, do not hesitate to ask us. We will throw that on the illustration. Okay, Ben, you've got a question here for us as well. In the attorney example that we presented, two assistants received a 2-year benefit period. How long is the benefit period for the purchasing attorney in this multi-life? We quoted her out to age 67. So the policies do not all have to match up. They don't all have to be the same. They can all be different. You can apply for different amounts, different waiting periods, different benefit periods. In that example, that attorney, she still was able to keep the policy out to age 65, retirement age, and we just added those 2 lives with the 2-year benefit period and the 365-day wait. So hopefully that answers your question, folks. Again, you guys have been great today, as usual. We look forward to working with all of you, and we appreciate your business. On behalf of my colleague, Andrew, I'm going to sign off and say I look forward to seeing you all next week on the Wednesday webinar. Have a great day. Thanks.